All right. Matt Davio back today with Sean McLaughlin, a good Irish bloke from Chicago. And Sean, thanks for coming on today with me, and appreciate you taking your time and talking about trading today.
Hey, happy to participate. I've watched many of the interviews you've done with some great people, and I'm humbled to be included in the cast of characters for sure.
Cast of characters, I like it. So let me ask you. You've been in Chicago for a while, but why don't you take us back a little bit how you got into this business? We'll start kind of from the early days. We talked a little bit off camera before you came on. Grew up in Buffalo, went to school there. Did you grow up in Buffalo, upstate New York, and then stay in state college there?
Yeah, I was born and raised in Buffalo, lived here until I was 22, or lived there until I was 22. Went to state school there, University of Buffalo.
Yeah.
Go Bulls.
Woo. Go Bulls. Hey, they're up and coming. They probably had a better defense than Michigan did this year.
Oh, yeah, but at least Michigan makes it exciting. I mean, that Denard Robinson guy's a lot of fun.
It is a lot of fun.
But yeah, so I graduated from Buffalo in '97, and then I moved to Florida in Tampa. Lived in Tampa for 5 years, and it was actually in Tampa where I got involved in trading. I kind of fell into trading by accident. I'd always been interested in the markets. In my first job out of college, I worked for MetLife selling mutual funds, which turned out to be an awful job for a guy right out of college. When I moved to Tampa, I met some people, and long story short, a friend of mine knew about trading, and he had found a small day trading firm, arcade or whatever you wanted to call it. This was in 1998. That was kind of located right down the street from us, so we'd go over there on our lunch breaks and check it out. And back then, it was kind of almost like a video game. They had computers set up, like a little demo account where you can go in and bang keys and make fake trades, and it seems so easy. Like, oh, look at me, I just made 10 grand trading Yahoo. That's pretty cool. So my buddy had some money. He was married at the time, and his wife had been in a car accident or something the year earlier, and they had a settlement, and they had like 50 grand that they could burn. When basically that's what you needed. You needed like 50 grand to open up an account to trade there. He decided to do it, and I would go in every day with him on my lunch break and just kind of screw around and bang around the keys, and it was better than hanging out in my office where I was working at the time. So
who were you selling the mutual funds to, MetLife? I mean, were you retail or selling to institutions? I'm just curious.
I was selling to nobody, and that's why I had to quit. It was, it's a relationship-based sale. They want you to sell to the people you know and your network of people. And unfortunately, while I had a huge network of people and friends and colleagues that I knew coming out of college, unfortunately, they were all my age.
Yeah, nobody had money.
Most guys who are 21, 22 years old, whatever money they have left after their paycheck on Friday is getting blown at the bar at happy hour. So,
exactly.
They weren't looking to invest in a mutual fund or talk about, term life insurance.
Okay, so that's interesting. We have a similar background. When I'm a little older, but I graduated in '89, and same thing. I went to work for the Equitable, selling again, whole life is what they wanted me to sell in mutual funds. And first of all, I don't believe in whole life, so I had a product. And, same thing. When I got my Series 7, got my licenses, but I knew nobody with money, so I was selling retail just like you were.
Yeah.
So you see, but I kind of went to a different direction before I came back to that. But this is your story. So I'm curious, what did you study in college? How were you interested in markets? Because you obviously took a job in what you thought were the markets with MetLife.
Right. I studied. I got a degree in marketing, and kind of the reason why, in hindsight, why I got that degree was I felt that marketing was the easiest way through business school.
Okay.
I'm kind of ashamed to say that, but that was kind of the key, or my thinking. I had attempted to minor in finance, and I didn't make it through too many classes before. I just didn't like it, so it's kind of ironic where I've ended up in life. But
but finance has here's the misnomer: finance has nothing to do with trading.
That's true. The classes I was taking towards my finance minor was international business and currency and banking, and it was just stuff that was just, I don't know, it just was way over my head and I couldn't relate to it, so I didn't like it. So I just decided to focus on marketing. That was it. That was something I understood better.
So, okay, so walk us through this. You've been working maybe for a year. You step into like you said, you said it, it's an arcade. Because back then in the late 90s, the markets were just really starting to take off. I mean, 97 to 2001 was really when I was, spending, I was really cutting my teeth and, in trading. And I was trading stocks then also. So, but I didn't work for a prop firm. So I worked for prop firms later in my career, but I'm curious, what you thought when you were walking in there. Obviously you were motivated by the dollar, but, I always wonder, there's something, you're still in the game here now, 13 years later, so you've had a lengthy career. What was it that attracted you to this game?
That's a good question. I think what really appealed to me the most was that when I walked into this office, I saw a bunch of guys my age, the early 20s, some guys in their late 20s, who were dressed in, shorts and t-shirts and flip-flops, and were making more money in a week than I made in the last 6 months. And I mean, that's the obvious attraction. But I mean, it went far more deeper, I think, to me. And I think I realized it as I got older, is that I really liked the fact that I was in control of my success. It was, I didn't have to relate or have somebody else tell me whether or not I'm doing a good job, or I didn't have to wait for somebody to give me a promotion or a raise. I was really in charge of my own, worth, so to speak. And I would get constant and immediate feedback on how well I was doing. So I just it was like an independence to me, and I've never been somebody who's been a good employee, so to speak. I mean, I've had jobs and I've done well, and if I'm in the right situation, I can thrive. But for the most part, I kind of like to do my own thing and work at my own speed and set my own goals. And trading for me just had all of that. So that's kind of why I was attracted to it, and that's why it's kept me around.
Yeah. And it's interesting. Again, I come from a similar background in that I studied economics and history, got majors in both, but neither really directly apply to the markets. However, they do help, I think, in understanding game behavior. When you first got into it, were you an athlete growing up? Did you play sports? I'm always curious, your background. Were you a competitor in that regard?
The only really organized sports I played ice hockey, varsity ice hockey in high school, and I played varsity volleyball in high school. That's really the only organized sports. I mean, I played like t-ball and stuff when I was 6 or 7 or 8. But that being said, in my neighborhood where I grew up, the kids were playing sports all the time. I mean, we were year round. We were either playing street hockey or tackle football or baseball or that's pretty much it. Those 3 sports. We didn't really play basketball in my town, but I mean, year round. I mean, we were playing something almost every day.
I'm curious. This is always something that I think about. With my own kids, and I've got 4 of them now, just starting to play sports. Do you think that being a trader today, some of your success comes from playing those games as a kid and learning how to lose and win?
I think you would take somebody smarter than me to make that correlation. But I mean, sports teaches people how to persevere and how to dig deep and how to lose humbly and gracefully, and also to win gracefully. And sports also kind of fosters that competitive drive that you need in any business endeavor, really, not just trading. I mean, you have to be willing to compete on some level to be successful. So sports is a good.
I'm sorry.
So I was just finishing up saying that. So sports is a good, way to, one way to learn all those things.
Yeah, I agree with you. And a lot of times I find you'll see a lot of engineers and scientifics, doctors that want to get into this business, engineers and doctors, and they're smart people. There's no doubt about it. They're very smart, but a lot of they also want to put something into a box. They want to quantify everything, and I think. Personally, that there is no holy grail when it comes to trading. There's ways to make money, and there's millions of ways to make money. but what it really takes, and this is something that I really appreciate about, your blog, The Minimalist Trader. I love, that's really something that we try to teach our students here at Miss Trade is, through trials and tribulations, most people, go through it in a different path. But what you're talking about when it comes to trading is really simplifying it, finding out, what works for you in your trading methodology and sticking with it. It's a grind. I mean, most of the time as a trader myself, I do nothing. I'm sitting on my hands. I've done my homework and I know when I'm going, and it's interesting, I want to continue a little bit because the thing you wrote today about action versus reaction. And I talk about this all the time. I'm a reactive trader. I can't predict and I can't fight against the big boys. It doesn't work in the way I trade. So tell us a little bit about how you got into, that practice and it's not, I'm sure it's not just in your trading life.
Yeah, I didn't realize that I was, quote, a minimalist trader until just recently, actually. I discovered probably early this year, maybe last year, I started noticing some people in cyberspace and blogs writing about this minimalism lifestyle. And they're doing something a little bit different. They're kind of applying minimalism to everything in their life, and they're living with 100 things or less, and really being drastic, and that's great. I'm not attempting to do that, but what I'm trying to do is I think there's a lot to be learned from this minimalist mindset that can be applied to trading and to running your trading business. Living in Chicago, I've had the unique ability to meet a lot of traders who've been floor traders and they've been down there for years. And the thing that's common with all these guys that I meet is they've struggled once they've left the floor, because the floors are pretty much dying essentially. They've struggled making that transition from floor trading to being a screen trader like what I am, because they're used to the constant action and the making hundreds of thousands of trades a day. And that doesn't really work, or at least I haven't found a way to make it work for me as a screen-based trader.
Yeah. So let's before we get into the minimalist viewpoint and how you trade, let's get back. So 98, you're in Tampa. Do you really make that leap forward and start trading full time? Then did you leave your job at MetLife?
Yeah. I left my job at MetLife when I left Buffalo. And then I moved to Tampa. I didn't have a job when I moved to Tampa. It was just kind of, I lost my job in the dead of winter in Buffalo, New York, and I'd lived there all my life, and my dad was living in Tampa and free place to stay, and I was like, now's the time to go if I'm ever going to do it, so let's just go. So right. I packed up my car, and whatever fit in my car came with me, and whatever didn't stayed behind, and that was that. Okay.
So you're down there, you're looking for work, and you stumble into this trading world. What does your dad think about this?
He was supportive. I don't think he knew much about it, to be honest. But actually, at this time, my girlfriend, who was still back in Buffalo, had just moved down to Tampa about 4 months after I'd been down there, and we got a place together. So I was living with my girlfriend at the time. Okay.
What'd she think of it?
She's now my wife, but she was my girlfriend at the time. She was then and still is today, amazingly supportive, almost to a fault.
Well, you have to have that. I always tell people, you have to have either, an acceptance by your spouse or your significant other. Otherwise, because it's not an easy business.
There's absolutely no doubt about it that if it wasn't for my wife, I wouldn't be sitting here talking with you right now. I would have given up trading a long, long time ago.
Sure. So why did what is it about her relationship with you that made you stick with it?
Well, she's always been super supportive. I mean, just, emotionally, she's always encouraged me to do what I think is right and to chase my dreams. Sometimes I'm a little bit of a dreamer. But she's always been really cool about it, and also she's been, she was very financially supportive as well. I mean, when I first started trading, I didn't make a single nickel for the first 16 months that I worked. I didn't make any money, no take home, nothing.
But did you lose money?
Well, yeah, but it wasn't my money. See, we skipped over the part of how I got started, but
Okay.
somebody put up cash for me I kept going back to that trading office with my buddy when he opened up the account, and the owner of the firm, kind of took a liking to me, saying, "Hey, you seem like a smart guy. If I told you that I knew somebody that would put up 50 grand for you to trade, and you would give them a cut of your profits, would you be interested?" And I said, "Yeah, I'll start tomorrow."
Exactly.
That's kind of how I got started. So, I started with this guy's 50 grand account, and I, in short order, probably lost. I think I was down like 20 grand at one point. And then I started to turn the corner and, started to slowly make it back, and it was a slow climb. And then finally, something just clicked, you hit that moment, and then I just started making money in a hurry. But it took, 16 months before that happened.
Okay. So tell us about that curve and, how were you trading when you first started? How did, like you said, what was it, where was your bread and butter that you really started making money and, consistently and being more patient and all the things that come with trading?
Well, back then it was high velocity, high volume NASDAQ stocks that we were trading. I mean, we were trading, everyone in our office was doing, 1 million shares a day each. I mean, it was crazy. And I was a very, volatile or very high volume guy, but I was probably a low man on the totem pole in my office. There were some guys really cranking out some serious volume. We were scalping. I mean, this is back when stocks traded in fractions, and we were
you guys were, probably on the tail end of the So's Bandit days, trading for eights and steensts and all that. That was fun.
That's what we were doing.
That lasted for a while, but, at some point, how did you transition out of that? Because that didn't last forever.
Yeah, after, it was really good pickings from, 99 through the tech implosion all the way to about, mid 2002. And that's kind of when all the juice kind of came out of the market. It, wasn't going down anymore, but it wasn't really going up. It was just there wasn't much volume. And somewhere around that time is when decimalization happened, and it just the game completely changed, and we all had a hard time adapting. We had 40 guys in our office trading, and probably by the end of 2003 there were 8 of them left, maybe.
Yeah, and it really only got worse from 03 through 06 on the equity side. So is that when you made your move in 03 then to Chicago, Sean?
I moved to Chicago in 03, and slightly before that, I kind of had gotten out of trading stocks and started researching commodities and started looking into trend following trading styles, and I really kind of learned or got very interested in the whole turtle trading experiment that I'm sure you've heard about with Richard Dennis and William Eckhart. I did a lot of reading about that and a lot of investigating, and it just really appealed to me and it made sense to me on an intellectual level. So I started trading commodities in, I think it was like late 2002. And then I ended up raising some capital, through some people I knew, and started a very small hedge fund, it did really well. It was kind of ironic. I only was in business for 18 months, and I made 54% returns for my investors after my fees.
Awesome.
But I had to close it down, unfortunately, because I basically had 5 investors, and it was 1 big guy and 4 small guys. And the big guy was an old guy, and he wanted to retire. He wanted to retire and sail off into the sunset and put his money in bonds, something safe. So once his money was gone, I had to close shop because I hadn't been in business long enough to really have a marketable track record.
It's tough. It's tough. I had a small fund too. Also, I worked for 2 funds, and I started my own fund 03 through 06, and it's a tough road, man. And unless you have the pedigree to raise $100 million, I say in this day and age, it makes it pretty much impossible. You have to have $100 million just to turn on the lights today, and that's a lot of dollars to collect again. So it's tough.
Yeah, and I was nowhere near that size.
Yeah, me neither. I got to maybe a quarter of that. My fund was like 25-30 million, so very difficult. And so you're back out on your own. You obviously had a little grub stake, and you were successful. So have you been just trading independently on trading your own book since that time?
At the time that I closed my fund, I was that my clearing broker had offices in the Chicago Board of Trade, and they let me trade in their office for free, which was nice.
Yeah.
Because I was working from home, so the fact that I could go work at the Board of Trade in a free office was pretty sweet. So,
Right.
So when I had to close my fund down, I was looking for something else to do. So I ended up becoming a member of the exchange and tried to trade Dow futures.
Okay.
And that was a very ill-fated attempt. It did not work very well.
Okay.
Lost a bunch of money doing that. So after that, that's when I kind of had a moment of clarity, so to speak, and really just kind of broke down everything that I've learned and tried to start over, and I started focusing more on option strategies and just simple stuff that is kind of where I'm at now, and it's I feel like I'm in a much better place. I'm not making the big bucks, but I'm making a consistent return on my investment, and most importantly, I feel like I'm much more in control of my time and what I'm doing, and I'm much more creative in the things that I do, and it's trading has become something that I do, not who I am.
So what do you trade now?
I trade almost exclusively options. I'm trading these days the QQQs, the NASDAQ. I'm doing a real basic strategy that I'm selling premium and looking to kind of track the performance of the index with less volatility. That's kind of my aim. So I'm not trying to blow the doors off. If I can make 25% a year on my money, I'm super happy with that.
I'd say so. You do that every year consistently in scale, you'll triple your money every 3 years. So there's nothing wrong with that. So you're basically selling premium. So for our uninitiated viewers out there, that means you're selling both puts and calls primarily.
Primarily puts, and then occasionally calls when I feel like the market's ripe for a sell-off. And I'm by the way, I should mention I'm doing it with weekly options. I feel like there's a little bit of an edge doing it with the weekly options, because you got a lot more of that quick theta decay that works well. And I'm also very important to mention is I'm not doing it with leverage. So, for instance, the QQQ right now trades at about $54 a share. So, I'm selling one put for every $5,400 I have in my account.
Yeah.
So NASDAQ could go to zero and I'll still never go debit in my account.
Exactly. So, it's a key understanding, because most people will go, okay, because the pros, and I would put yourself into that lot now, typically, sell premium, whether it's puts or calls. And it can be dangerous to the retail person who's never done it before, because, as you said, if they don't understand that, the risk is unlimited by selling options, then they shouldn't be in that business. What you're talking about, Sean, is, exactly the way that you should do it, which is, worst case scenario, I can cover the losses on every contract I'm selling. I don't need to go into margin to do that. And I would highly recommend that if you're going to be selling options, please understand that there is unlimited risk if you don't define it.
Yeah, you don't have to go too far to find somebody who was short premium on May 6th and ask them how they were doing.
Exactly. So you brought up the flash crash. What happened to you on that day? Did you have positions coming into the day? Did things happen? How do you deal with that?
The flash crash actually was a very good day for me. At the time, I was long puts on the S&P. I had been my investment thesis at the time back then in the spring was that we were due for a rollover. I mean, I never would have anticipated anything like what happened on May 6th.
Right.
But I felt we were ripe for a pullback, because we were kind of just, especially in late April, we were going up, and it was just like a slow chug, and volatility was really low. I mean, if you looked at the VIX or the VXX, I mean, they were just, super low, lower than they've been in years. So I was willing to take a little heat on my position, and I was taking heat on my position. I was long puts, and I kept rolling them up as the market would go up, and I think I was down like maybe 10% of my count for the year at that point. And then, when the flash crash happened, we were already, for about 4 days, we were already into a pretty good pullback in the market.
Yeah.
So I had already recouped all my losses for the year coming into that day, and it's kind of funny. I just that afternoon I went up and took a little walk down to the corner coffee shop in my neighborhood here and just get a cup of coffee and a little bite to eat. And I came back to my office in my house and just
you had to rub your eyes.
It looked like a bomb blew up.
You had to rub your eyes.
I had no idea. Yeah, I had no idea what happened, and I mean, I came back after the bottom had already hit, and we were on the way back up, and my trading platform was working all funky, and it was all slow, and I was like, it's just not right. I didn't know what was going on. Luckily, I had my StockTwits platform up, so I was able to see what people were talking about StockTwits, and that's how I knew. I was like, oh man,
yeah.
Something crazy going on. And it was also nice to walk into seeing my account up like 20% on the day.
That's awesome.
which was also a nice surprise.
I'm curious if you weren't, if you had sat there, as you said, it was slow, you had your position on, your risk is obviously defined because you were long puts, so you weren't that concerned about it. You know what you could lose. You walk away not thinking this is going to happen. Do you think if you had stayed, you probably, this is always, I'm curious when, tying this into the minimalist trader. If you had stayed, do you think you probably would have covered too early or, sold them too early?
I've asked myself that question many times. I'm willing to bet that if I was sitting here at my desk watching this market implode, I don't think I would have been able to get out of my position because, the spreads on those options were pretty ginormous at that time. And also, my platform, I trade through Thinkorswim, and this is no knock against Thinkorswim, but their platform was getting bombarded by everybody, and I don't think I would have been able to mechanically even get off a trade because it was so overwhelmed. So I probably would have just sat on my hands and said, "Whoa, just watch."
Yeah, which is it's interesting, because what if it had been against again, what if you were short puts at that time, and you came back to that same situation? Have you thought through how you would have reacted?
I might have been looking for the nearest window to jump out of. I don't know.
Hopefully you're not more than a couple floors up there. Yeah.
My office is on the third floor of my house, so it could have been ugly. But no, I've learned through frequent mistakes in the past that I've learned not to put myself in a position anymore where I could come back to my desk after being away for an hour, like on May 6th, and all of a sudden I'm out of business. I've had experiences like that or near that, and I don't want that ever again. So I've structured my trading and my strategies around never being in that situation.
Okay.
And that's
Smart.
the beauty. That's one of the beauties about options is you can know your risk at all times if you do it right. If you're naked short and you're leveraged, that's a different game. But that's not the game I'm playing.
Right. So you're doing a lot of, again, you're trading wisely, buying calls or back spreading, different things that lock in your worst case scenario, which is the way I always tell people options are great devices if you can utilize the tools well and define your risk. You can still maximize upside, especially on a day like that. If you were, like you said, if you were, buying puts there, you're just making a huge 20%, as you said, in the day without a lot of risk. So you mentioned StockTwits. I've been on the StockTwits, site for ages. I used to do a lot of, webinars for them. It's a great group of people. You were trading in the 90s. Did you, I'd say, we're Web 3.0, 4.0 again. We've seen all this stuff before. How do you utilize social networks and your blog and how does that affect your trading? Because you said, in that case, it was a very useful tool for you to come back. You didn't have a TV on, you just went to your stream and said what's going on, and boom, it's instantaneous. I agree with you on that.
I'll tell you what, StockTwits and blogging for me have completely changed the way I trade and have completely changed the way I interact with the community, and it's amazing. One of the things that I would always complain about to people that would ask me about what I do for a living, the people who weren't in trading, I'd tell them I work from home, and they'd all be like, "Oh, that's great," and I would be like, "No, I hate it. It sucks." Yeah. I'm a pretty social person for the most part, and working at home and trading my own money sounds great, but especially like in the wintertime here in Chicago, there might be stretches of a week or two where I might not leave the house. Yeah. and that I get pretty stir crazy. So when I discovered StockTwits, it just kind of opened up a whole other world to me. I was able to network and get to know a lot of people that I never would have had an opportunity to get to know. Even living in Chicago before StockTwits, I didn't really know that many traders. Even though I spent time at the Board of Trade and worked in an office there, I still, I wasn't part of the establishment, so to speak. So, I was always the outsider. But, now StockTwits has come along. I've been able to meet so many people, not just in Chicago, but all over the country and even all over the world. People who are just amazingly sharing, and knowledgeable and funny and just everything. People that everyone brings a different skill to the table, and it's been amazing for me, and it's totally transformed what I do. And through StockTwits and following other people, discovering other traders' blogs, it inspired me to start my own blog. And I kind of started my own blog really as an experiment to teach myself how to do a blog. I never built a website before. I didn't think I could. So I started the blog, and it's really transformed into this amazing vehicle for me to throw ideas out there and to get feedback. Almost immediate feedback. And it's been amazing for me, and I've gotten way more out of it than I ever could have expected, and it's snowballing, and it's great. I love it.
Yeah, there's a couple things that you just said that I think are important for, again, people to realize. Trading can be and is very much, it can be very lonely, especially upstairs on a screen. And I think this is part of the reason, in my opinion, and I was never a floor trader. I've been on the floor many times, but I never primarily made my living from the floor. The floor trading community is a community, right? You've got all these guys that come down there, see each other every day, and even though they may trade differently than you and I, they still had that, bond, that link that they could kind of, it's kind of like going to confession. I can dump on you and get it out of me, and then I can go back to, trading. And once I've gotten that, process worked out in my head. And when you're trading on your own upstairs here on a screen, it's, who do you have? But you and the good guy, the bad guy, and the guy who doesn't know what the heck he's doing. And, you have these conversations with yourself all day. And this is exactly, the old message board, Silicon Investor in the mid 90s to 2000, same type of thing. It was like, bam, those were great. You could put out messages in the early to late 90s, and it was the same type of thing. StockTwits takes it to a whole nother level. It's a fantastic product, and it's a great community. And you're right. It can be a very, very trying business at times, due to the loneliness, and just due to the fact that, it's so easy to make a trade today. You trade too much. And that's, again, where you come back to, the part of the reason why I started doing these interviews now almost 2 years ago, and I started blogging 5 years ago, was more, again, a a way for me to dump, a way for me to just get it out there and go home and leave it at the office, so to speak. What's your process, with doing your blog? How do you do it? How does it help you?
My blog I don't really have a set schedule for how I write. I probably average between 2 and 3 posts a week. But the beauty of it is, at least for me, is that I write when I'm inspired. I don't try to force it. Yeah. There's a lot of great bloggers out there that can crank out, 2-3 stories a day, and, great for them. That's awesome. And I'm envious and amazed that they can do it. But for me, maybe it's part of my whole minimalist thing, but, I feel like less is more. And sometimes I think that I write even too much, but, I try to do it when I'm inspired to do it. I don't want to force it because, I feel like, there's a lot of blogs that I do follow, and I feel sometimes that, sometimes they're writing these posts just because they want to get something out there and they want to get clicks and all that. But, it's, for me, if on my site, I don't have any advertising on my site, so it's not like I'm trying to drive traffic. I'm not trying to sell anything. So it's just, it's just for me, a great place for me to gather my thoughts and to get immediate feedback, which is amazing.
So let's get into it a little bit. The minimalist, say that a bunch of times, trader framework. How would you define that?
Well, as I've gotten into this minimalist examination or journey or whatever you want to call it that I've gone down and trying to think of ways to apply it to trading, these recurring themes just kept coming up to me that, there are, 5 or 6 or 7 enemies that the minimalist trader wants to fight against. You want to fight against over trading and high overhead and the need to be right and cable financial TV like CNBC and Bloomberg. All these things are enemies that in their own way eat at what you're trying to do. And they're either distractions, or they block your focus, or they put you in less than ideal situations to succeed. So I've tried to examine each of these enemies, as I call them, individually, and I hope to expand on it more. But as I wrote in a piece recently, I don't have the answers on this. I'm discovering this as we go along, and the more I write about it, the more people respond to it, the more it kind of feeds itself and gets me to come up with another idea. And we're all in this together is kind of my attitude, and I hope that people benefit from it, and I know that I am just writing about it and thinking about it constantly.
That's great. I mean, I love the idea again that you're writing about. Talk a little bit about overtrading, if you would, and then I want to hear your thoughts on. Oh gosh, what was the other one that you were just talking about? One of those 7 topics.
Overhead.
Well, yeah. Let's talk about overhead, because I think that's a good one. I think people like to spend too much money on technology and screens before they even have an idea of what they're doing.
Yeah, I've seen that firsthand. A lot of people think that if they have the most state-of-the-art computer and they subscribe to the hippest and coolest newsletters and have the most high-tech and expensive iPhone application and all this and that that's what they need to be successful in trading. But I'm here to tell you that that's not what you need. I would be successful on a crappy little Windows XP with one monitor to doing what I do. I mean, I realize that I don't trade like everybody else trades, but it's not the equipment that matters. Because all you really need is access to prices and an ability to enter a trade. I
agree.
Everything else is just noise to me.
Yeah. So take us down. You're one that used to trade 1 million shares a day. How many trades did you do? What's an average day for Sean McLaughlin? How many trades will you put on?
I'm kind of embarrassed to say this, but
tell us.
I pretty much do on an average week. I do 2 trades a week.
I like it.
And they both happen at the close of trading on Friday.
Gotcha. That's good.
I'm trading weekly options.
You're opening and shutting the last week's close. Yeah, I get it. And you know what, Sean? I used to be the same type of guy. Whether when I was running my portfolio for a hedge fund, I would trade. It was less than when I was, trading more before I ran that fund, and now I've taken even another step. I trade primarily, S&P 500 futures, and I trade like today was a pretty slow, typical day, and I did 2 trades, 2 opens and 2 closes, and that was it. And it's a busy day.
Hey, that's all you need. A measure of a trader is not how many trades he does in the day. It's what does your bottom line look like at the end of the day. If you did no trades but you made 10 grand, then that's a good day. It doesn't matter how you got there.
Absolutely correct. So the one I wanted to talk about with you, because this feeds right into it, is the need to be right. I recall it. This is perfect because I talk about this all the time. I see traders come in, they want to learn, they want they're excited. And I tell them flat out, I used to care. I used to care that, I could predict that the bubble was coming in 2008, and I saw it as far back as 2003, but it took 5 years for it to happen. In the meantime, I didn't, I wasn't running a long-term portfolio, so who gives a rat's patootie, you know what I mean? And then it happens, and it's great. It's great. But as a trader anymore, I don't care. I really don't care. I just want to come in, have a very, simple set of ways to make money, do my job, spend more time with my family, spend more time on myself, and as you said, minimalist things, taking care of eating less, I think it all feeds together. Trading less, eating less, being more healthy in the way you work out, spending more time with your wife or your kids. Those are the things that are important, not how many trades did I do today that will ever be remembered.
Oh, absolutely. And, we talked about a little bit earlier about how coming into the flash crash, I was long puts. And so, I had a thesis that the market was headed for a pullback. And it felt great to make money and be right. Mm-hmm. That was a nice little ego stroke for me. But, so many times I've, in the past, especially in the past, where I had put together my thought of where the market was going to go, and I would sit with a losing position because I knew I was right. And I know it's just a matter of time, and it's just give me another day, and the market will agree with me. And I've lost countless dollars thinking that way. And, and I feel bad for the guys and the girls who go on like CNBC or Bloomberg TV, and they're married to a position or to an opinion. And, great that they have all kinds of stats to back it up and anecdotal evidence to support their position. But I feel bad for them because now they've put themselves in a position where they've publicly announced to the world that, hey, I'm bearish or I'm bullish. And, I'm sure that there are a lot of people in that situation that their ego gets involved and it prevents them from making the trades that they have to make because they're so committed to their position publicly.
Yeah. That's absolutely true. And anymore, I have no problem being wrong. I think that's part of this business, and it took me a long time. I always say to people, if you can figure that out, the soonest you can the soonest you can accept that. And again, that's really why I called myself Miss Trade, because I think women are better suited as traders in that they don't have the ego that you and I do. As you said, ego is the biggest problem when it comes to trading. So they can kind of decipher and break it down a little bit more clearly. So I want to trade like my wife would. I want to trade like the best female traders I've ever known, and I've known a few very good ones, have traded. And I have to deal with the fact that I'm wrong, and I have to deal with the fact that I'm going to miss trades every single day, and that's okay.
I do think that's very ironic that some of the most unemotional traders out there are women. I find that ironic.
But really, when you think about it, Sean, it's also apropos, because trading to me is very much a fading game. I want to do the opposite of what I always tell people, where is the boat most likely to capsize? I want to be away from that motion, wherever that is, long or short. And that's how I make money. Because the biggest moves come at the turns. So that's the type of trader I am, and that's why I am reactive. I just wait. I used to be the guy, my biggest losses came fighting stocks that were, trendy, Krispy Kreme type names that I knew they were going to fall. But I was so, as you said, married to it, and I was fighting it, just telling everybody this thing's a piece of junk, yada, 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 blah, blah, blah. But I didn't capitalize, So that's a tough game. Like you said, unless you have pockets like Warren Buffett to be a value buyer or a value seller, which most people don't have the deep pockets to sustain that lengthy time that is necessary, because I guarantee you it'll be longer than you think. It's always been that way for me.
Yeah, it's the problem that I notice a lot with people lately is they see who's making the money. They see people like Warren Buffett as a fantastically successful investor, and they see the high frequency guys who are building algorithms to make money, and that's all great stuff. But for most retail traders, you can't compete on that level, on that playing field. So I don't even know why even bother trying. You have to play a different game. Show me 100 profitable traders, and I'll probably show you 100 different ways to make money. There's no one right way to make money.
Absolutely.
But in today's day and age, with the technology that's available, everybody wants to do something that's real high tech and real cutting edge to make money. But no, maybe it's just me, but I want to slow down. I want to take the bigger picture view. I realize that I'm not going to compete on speed, so I want to deliberately be slow and let trades develop and let trends develop and be a part of that. Because, if you look at, everyone talks about this, but, the long-term historical returns of the stock market are 8-9% a year on average for 100 years or whatever that is. If you widen your perspective and you widen your frame, or your time frame, trends become a little bit more apparent. And and I just think that's for retail traders, that's where they need to be focusing to really make money. You have to look at this as a long-term thing. It's so tempting to want to go in there and scalp and make quick hits, day in, day out. It's almost like a drug for guys who can do it well, but it's exhausting and it burns you out. And I've been there. I've done that. You gotta think long term. You gotta come up with a strategy or a system or a pattern that is sustainable and something that you can sustain the energy to keep doing for the next 10, next 20, next 30 years, wherever, depending on where you are.
Yeah, you nailed it right there. I mean, I say this all the time. For me, high frequency trading, even I could do it, but I can't. You know what I can't handle, Sean? I can't handle losing that many times in a day. I can handle losing a couple times, but I can't handle losing 300 even though I'm going to win 400. It's just too much. It's too much for my psyche. So I'd break it down to 0 to 4 trades a day at the max, and I prefer to trade stocks weeks long. And much like you do with the QQQ options, I do the same thing. I bought, for example, I was buying Deckers, the maker of Uggs, after they announced that news with Tommy Brady about 10 days ago. The stock shot up, from 60, 70, all of a sudden it's 80. I started selling Monday because Monday night is the Jets Pats game, the biggest Monday night game of the year. I'm like, this thing is going to top out Tuesday morning. This is exactly what I told my members. It's going to top out because this news is all out. Now everybody knows it because of Monday Night Football, and it's going to dump the next 3 days. Boom. That's all I'm trying to do. I'm just trying to, find that move, and I'm done. I'm not saying they're not, I'm not saying people aren't going to keep buying Uggs, but I'm looking for a little counter trend move in a crazy parabolic section.
Yeah.
And that's it. It's just one little game, and I had a very defined risk parameter, and that's all I'm looking to do. And generally, though, I'm looking to surf, as you said, Sean. I'm looking to find a wave, wait for it to come in, and I'm going to ride it, up or down.
Yeah, I did. I wrote a blog piece maybe a month back, and I think I put it on. I occasionally write for the StockTwitsU.com page. And I did a piece about finding winners, finding the next Apple. I mean, if you look at a 10-year, just a 10-year chart of Apple, it's gone from, $6 up to, where's it at now, $3.20? I don't even know where it's at now, but it's crazy.
Yeah, and, 53-fold, exactly.
Yeah, the argument I was making is that, if you dedicate yourself to being consistent, to looking for stocks, looking for companies that are having strong earnings growth, really kind of adopting the Investor's Business Daily approach to the way they find stocks, which I think is a great philosophy. I like the way they approach stocks and finding stocks with fast rising earnings.
Right.
If you consistently apply that kind of way to identify stocks, and you make investments in them, make small investments. Maybe you invest $1,000 in the next Apple, which you'll know. Of course, you don't know if it's the next Apple. It's just a company that happens to be doing well right now. It's a young company, and if you systematically add to these investments at higher and higher prices, and that's the key word. It has to be a higher price, no matter what. If you say you close your books at the end of every month, and then at the end of the next month you open it up again, and you look at your portfolio, and you got 6 stocks in there, and you got $1,000 to invest. You say, okay, I'm going to invest in the one that's done the best for the past, or that's doing me the best, or whatever. If you do that consistently, my argument was, if you happen to catch a company like Apple, you would have, if you invested $500 once a month, whenever that made a high that month, you would have done it 36 times, and your original $500 investment would have turned into something like $170,000, I think.
Right.
And the argument I was making was, all you need to do is find one stock like this in a career of investing, and you're going to come out ahead.
Yeah.
Very much ahead. Because you can invest in 100 companies over, 10 years, and, let's say 5 of them completely go out of business, you lose all your money. The next 40 are, your break even, so to speak. Then the next 20 or 30 are, you had a good run, maybe you average 10, 15% a year on those. And then you'll have 1 or 2 that are maybe like an Apple that just went parabolic.
Yeah.
And that's all it takes to have, to have a very profitable, investment portfolio?
You know, that's why I'm a big fan of Talib and Fooled by Randomness and Black Swan. You know, really, I prefer Fooled by Randomness, his first book. It's really the same book. I think it was the title that caught, you know, the wave of the nation as far as Black Swan was considered. But it's the same strategy. You know, I always tell people, if you really want a great strategy, and it's the same thing that you just laid out there, I'll just put it a different way, the way Talib puts it. Basically, he says, I'm going to go into the corner, and I'm going to buy cheap puts and cheap calls on whether it's an index or a basket of 500 stocks or 100 stocks. I'm going to buy out of the money, you know, way out there on the bell curve again, calls and puts, because I know black swans are going to happen. I don't know how they're going to happen or when they're going to happen, but I'm going to continually lose my money in small chunks, bleed, you know, little nicks, and then when the black swans happen, I make all my money plus, and it feeds the beast, if you will. But, you know, the thing is, most people can't handle that type of, again, I bet you he loses 95% of the time of his bets.
Oh, yeah.
If not more. But he's probably one of the most successful investors in the way he does that. Now he's got the capital to do it. He's got some tools, obviously, that help him to, you know, find out how far out do I buy and those types of things. But these are things that anybody can do, I believe, Sean. And so you're absolutely right. You know, just make sure you're consistent in your approach and you have some historical backing that shows, you know, over time, that type of strategy will make you consistent money, and stick with it. You know, grind it out.
Yeah, that's a very important point, and I was definitely guilty of that through much of my career, where I would frequently strategy hop, so to speak.
Yeah, style drift, strategy hop, absolutely.
Yeah. If you were to look at the 3 or 4 computers that I've gone through over the past 15 years, you would find hundreds of Excel spreadsheets where I was coming up with different trading ideas and trading strategies, and I would trade them, and I would be, you know, moderately to very successful for a stretch of time, you know, ranging from a week to a couple of months, and then I would inevitably hit that bad patch where either I would consistently lose every day for 6 days in a row, or I would have a serious drawdown, and then I would just give up and throw it away and start over. Where if I would have just stuck with the original one, I probably would be far ahead than where I am right now. But
sure.
You know, it took me having that experience to learn that that's no way to be sane. you gotta come up with something that makes sense to you fundamentally, that agrees with your constitution, I guess, so to speak, you know, with your stomach, something that you can handle and sleep on. And once you find that strategy or strategies, you know, you got to stick with it and live through the ups and downs, and make sure that it's a strategy that has the kind of downs that you can deal with.
Yeah, I think that's fantastic advice, and I always tell people the same thing. It's like, my stomach may be able to take more risk than yours, so you need to figure out what that, you know, gurgling point is in your stomach before you can step into this game. And if you don't know it, maybe you have to feel it once or twice. And you'll know it. I mean, it's intuitive, and you'll know it when you get there. And maybe you'll stretch the boundaries after doing this business for a long time. And again, but you alone out there, traders and wannabe aspiring traders, have to figure this out. It's different for Sean. He may have a more ironclad stomach than I do. And but it doesn't mean one is right and the other's wrong. It's just you have to figure it out on your own.
Yeah, and this kind of all ties in well to this exploration of the minimalist trader that I'm going on is the fact that if you focus on trying to eliminate the high overhead and the over trading and the trading with money that you can't afford to lose, and stop wasting time on indicators and cable TV news. What you're going to find is that, you have a much clearer sense of what you're trying to do. You could focus. You're not being distracted all the time. You kind of, at least for me, I find I get myself kind of almost in a Zen moment where I just had these moments of clarity that I wouldn't have if I was, worried about making my rent payment or worried about, trading too much or, worried about having too much risk on in my trade. If I'm worried about all those things, then I'm distracted. I can't focus on what really needs to be done in that is coming up with a good trading strategy, or in my case, I feel like I have a good trading strategy now. I want my energy and my focus to be on executing my plan. And that's the most important thing for me.
I agree. And again, one of the things I work on every day is, did I execute my plan today?
Right.
Well, that's number one. That's number one.
Yeah.
After that, I can talk about making or losing money. But did I execute my plan? If I did, then it's a good day. I mean, and that's really the truth, Sean.
Yeah, that's a hard thing for some, especially new traders, to accept, is measuring the success of their day not by their P&L, but by whether or not they followed their plan and executed it perfectly or as close to perfect as possible.
Right.
That's a tough concept for new traders to get their head around.
It's hard. I mean, it takes a lot of self-reflection, looking in the mirror, because it's not me versus you, Sean. It's me versus me every day.
Right. Absolutely.
And the most, again, minimalist, simple form, that's all this is about, is 6 inches here and that guy in the mirror, not you.
That's right. And that's another thing that people who are outside of trading, they don't get when I say, they're like, oh, trading must be hard, competing against, all those big firms on Wall Street. And I'm like, yeah, it could be if that's what I was doing, but no. I mean, the hardest thing for me is competing against me and competing against my own thoughts. And some people don't get that.
Yeah. So, what are your biggest trade-offs being involved in this business as a ways of living? What do you think you gain the most and lose the most by doing this type of business?
Well, let's start with the things that I lose. I think as a stay-at-home independent trader, and we talked about a little bit before, is sometimes you can feel pretty isolated. Luckily, things like stock twits have come into my life, and things like my blog I've developed to kind of mitigate that outside stimuli, so to speak, from other people. But that's been tough. A thing about trading that's hard too is earning lumpy income. I can't tell you how much money I'm going to make next month or next quarter or next year. I have an idea what I'm going to make for the year, but I don't know when I'm going to make that money. And that I've adjusted to it now, but it's been tough. And there were times especially when money was tight and bills had to be paid, and I'm trying to budget how we're going to pay for stuff. It's tough to do as a trader.
Yeah,
Luckily, my secret weapon is I have a wife who has a very good job, and that's made my life a lot easier.
There's a lot to be said for that wisdom right there. I agree with you. You can't. Every trader turns the point, obviously, where you've got enough reserves to pay for those bills, but like you said, most people don't have that to begin with, and if you do, hopefully you don't lose it. And it is a tough business in that regard. You could make all your money in January and never make any money the rest of the year.
That's absolutely true. I know a lot of guys here in Chicago who made a ton of money back in May in the flash crash, but that's all the money they've made all year. I mean, right. They did well, and they're going to end up the year with a very good year, but that's really the only time all year they made any money.
Yeah, I always tell young traders or new people to this business, you can't draw the linear exponential pathway to this business. Just because you made $100,000 last month doesn't mean you can make it 1.2 million for the year. It's not easy to do.
Yeah, that was probably the hardest lesson for me when I first started. Because when I told you how for 16 months I didn't make any money, but then I started making money, and I was pulling down 20, 30 grand a month pretty consistently for a good string of months. So as a young guy, I was 24, 25 at the time, I was like, I'm going to make this kind of money for the rest of my life. I'm on easy street. So then of course you start spending accordingly, and, I bought nice cars and would go on nice vacations and do weekend trips with my buddies and just blowing money everywhere. And, I soon learned that, that money that I was making was not going to be consistently there. And, that was a tough adjustment, and I'm still paying for some of those mistakes today. I mean,
so again, as a minimalist, Sean, are you living below your means always? And I think you have to reward yourself at times, but maybe you schedule it, and you're doing things like that.
Well, yes. To answer your question, yes, we are living below our means now, and that's something that's relatively new for my wife and I. I think for most of the years that we've been married, we pretty much, everything that came in the door went out the door. So, in the last 3-4 years, we've really buckled down and, focused on the long term and definitely been more saving conscious and, careful on what we spend money on. And, part of that was forced upon us just, because of, economic situations. But, we do live minimalist in some ways. I mean, outside of my trading, it affects the way we approach things. But, there is a section of the world out there who are really gung-ho, leading the minimalist movement, and they're kind of taking it to the extreme of living with less than 100 things, and, they don't own cars and this, that, and the other thing. And that's cool. And more power to them. But you know what? I like having my TV, and I like having, some clothes to wear. and my wife and I like to eat out from time to time. So, we're not true minimalists in that sense. But, it's for my goal and my aim is just to apply minimalism to trading, because I think it's such a powerful concept for people to get their head around.
I agree. Sean, let me ask you one more final question. 2011, right around the corner here in 3 weeks. Any predictions? Any outlandish thoughts for the coming year for us?
Matt, I've gotten out of the prediction business. The prediction business does nothing but hurt me. But if I had to make a guess, if you had held a gun to my head, I'm going to say that 2011 is another positive year. I mean, every sign points to all the reasons why the market should roll over, and I was in the camp for a long time that, what we're doing government-wise and economy-wise, I mean, with the currency situation, I mean, it's gonna blow up in our face. But people have been saying that for a year now, and we just keep going up. So,
right.
I kind of joked on Twitter today. I don't know if you saw it. But I just kind of put a random thought out there. I'm like, what if Ben Bernanke's right?
Right. I agree.
No one's asking that question. Everyone just assumes he's wrong. And, I tend to think he's wrong too. But, hey, what if it turns out he's right?
Right. I mean, again, where is the boat most likely to capsize? Where all of us are betting, which is all the same right now. Nobody was, in 07 and 08, nobody was thinking about the collapse of housing. I was, but nobody else was. There was very few. So now everybody is thinking the same thing, Sean. Now the world's going to collapse. Nah, it doesn't happen that way. I agree with you somewhat. And that's where I like not being a portfolio manager anymore. Now I'm just a trader, and I come in every day with a clean sheet and a clean week and a clean month and just go, what do we have today? It's much more peaceful. It's much more zen-like. Keep up the good work, Sean McLaughlin, of the Minimalist Trader. I like what you're doing, and keep it up. I'm a big fan.
Hey, thanks, Matt. I really appreciate it, and you too. You're doing fantastic work, interviewing a lot of traders that I not only admire but respect, and you've even had a few of my friends on your program, so that's pretty cool. So keep that up. That's good stuff.
Thank you. Appreciate it.